Alright guys, this is the video for Spike versus a straddle sort of trade. Um, Obviously two different techniques, but both can be done at the same time, both can be used as different things. Now it happens today that we've got a Spike trade coming up, and we've got a straddle later on. So I'll show you how to do both of them in this video. The differences are, if you want to look at the ANZ business confidence, a straddle's going to move the market a lot bigger news, a lot bigger impact. A spike's only for a nice clean spike that's not going to give you much whipsawing. It's not going to go pull back the other way. It's just going to get that news and head off. So it gets that news, head straight up. You'll see that most of the stuff during the Asian session that's relative high impact, with the high impact sort of one there, but there's no news around it. You'll see that that actually does have a nice clean spike. Yeah, it's moving 20 pips. You're only after 10, so that's a good candidate for a spike, and I have spike traded this for a long time, and it's a good one to spike. So let's get on to spiking that one. So what I'll do is I'll grab the New Zealand, have a look at all of them, do like this, just so I can have a look at all of them, see where the RSI is going. Generally the New Zealand is just knowing the actual general sentiment of it. Has been going a little bit sideways, but it is starting to drop a little bit, starting to weaken off. So something like the sterling would be good if the spreads weren't so big. So spreads too big. Aussie, New Zealand, they're too closely correlated during the Asian session to get massive manoeuvres from that sort of news. So I'm getting rid of that. Euro, New Zealand isn't a bad one if you want a weaker currency to trade against, and New Zealand US isn't a bad one for strength on a spike. Yen, a little bit tricky because they're coming into their press conference and about their QE sort of program and their inflation, and it's not looking good. It looks like it'll be weak, but it's hard to tell until the news is actually released. So the two that I'm going for is the Euro New Zealand and New Zealand US. So I can actually drop off the rest of these. And just to make sure where we're sitting, have a look at the 4, the daily, and just bring it all out. Make sure you're not at the lowest lows. Make sure you're not at too many support or resistance zones, which that's fine. So for the spike, it's slightly different to how I've done these in the past. You got to make sure you're on a 1 minute. You put this guy over. I don't know if I've got, no, I don't have one set there, so we'll just set it up from the start. Now, points away for a spike, I'm going to go 40 on this one, so 4 pips. Points gap can stay the same, modified gap the same. Take profit. Now, I'm going to put in 25. Stop loss, I'm going to put in 15. I'll tell you why I do that. We're only going for 10 pips, but I'll show you how you do that after. 2015, it is the 10th. 30, and the news comes out at 10:30. Now, seconds before, everything else you kind of leave the same. Seconds before, I put to 6 just to get in there a little bit earlier. Swaying, I might go to 45 just so it doesn't close it too quickly. This is the difference here. Now, hold on. So, this is the way to do it, because generally how we were doing it before, you'll reach your 10 pips, but because of slippage and the spread and everything like that, it won't actually get you your 10 pips properly. So the way to actually get your 10 pips properly is by just slightly doing it differently. So you do, what you do is you've got to set your break-even points to 10, which is 1 pip, and then you offset to 100, which is 10 pips. So basically when it hits your 10 pips, it will then put a break even 1 pip behind it. So it's like 9 pips but 10 pips. So that is the theory. And if it keeps going, it's actually not too bad. So if it keeps spiking, you can have your take profit at 25. So it's not automatically going to close it, but it's going to put your break even at 10 when you get there. So if it keeps spiking past 10, then at least you know you're still going to get your 10, which is all you're after to start with. So that's all good here. Now, obviously, your lots, I think this is on like a $5,000 account, around that. So 5,000 times 0.05 is 250. Now, I'm going for a 15 pip stop loss, so the most I'll lose is 15. So the 250 divided by the 15, and then divided by the value of a pip, which is $10 at one lot, gives you a lot size of 1.66. So that would be my lot size for it. Now, you want to add spread to it? True. You don't want slip check on when you're doing a spike trade. That will screw you over, so don't do that. I don't use broker time. I've found it more accurate using other ways. Now, the euro I'm assuming is weak, so what we want to do is only allow sells. So false on buys, false on broker time, false on slip check, true on add spread to stop loss. Work out your lot size, your break even offset at 100, your break even points at 10, change Swain to 45. I like having it open a second before, just so you don't miss it. You know, your time, your take profit, your stop loss, your mod points gap and modified gap are all good as the default, and points away depending on the news, depending on the session, depending, you know, what else is going on near it, if it's volatile market or anything like that. I feel safe doing it on a 4 pip sort of points away. Okay, so that's that one. Now, a good way to do, just to do the next one so you don't have to go through all of them, just save it, you know, news one, whatever you want. Okay, so then at least when I go to the next one, which I've already picked, New Zealand to US, make sure you change it to a minute, put on your amazing EA, now just load news one. So that just got all everything that you'd set on the other one. I mean, you can have different points away, it all depends on, you know, if that pair moves more, if the movement, your average daily range, will depend on, you know, your points away, your stop loss, your take profit, so on and so forth. But those two move reasonably similar, not that much difference. Now, we're thinking the US is strong, so we'll allow sells, but we're not going to buy the New Zealand against it. So that's all good. That is how I will spike trade using the break even, just to make sure you can get those 10 pips a little bit better. And then I'll just let that run into the news. So let's go on to a straddle, just make sure I'm not going too long into this. So the straddle trade. Let's just bring this up. Clear tabs. It's for the Canadian one. So pick your ones normally. I'll just show you how to set up the straddle. So 1 minute. This is for a news story a bit later on. You can go points away because it's during the London, New York sort of cross. You want a larger points away. Now this is based on it moving the market. Like it's going to move the market. They're big news stories, so you want to kind of pair it against one that is the right sentiment. There's no point pairing it, let's say the Canadian US, but the US has got a little bit of strength now. You don't want to be buying the Canadian dollar versus the US because it might just spike in that direction, then it will reverse and continue going its right way. So you've got to get your sentiment right to do straddle trading. It's not going to work if you just pair it randomly. So then we go the take profit, 100, stop loss, 30. For tonight, 2:15, 10, 30. Time of the event tonight is 23. You can leave the seconds before at 5. Swain, you change to 3600, so it's open for an hour. That's why you've got your points away large. That's why you can have your Swain. I have a bit of a break even. You don't have to. Just use your offset to what you feel comfortable with. You might want to do like a 50 or something like that. Whatever you kind of feel like doing there. Test it around, have a look at it. So your lot size will be different based on the fact that you're going for 30, so I go the 5,000 times 0.05, so 5% is 250. I divide it by the fact I'm going for 30 pip stop loss there, and then divide it by 10. That'll give me a lot size of 0.8. So that's what I'll be doing for that. Max spread is 0. You want to add that, and you also want slip check to true, so you change slip check to true. You would probably do one on that, one on another one, so buys and sells differently because you want to make sure your sentiment's right. So you wait for the yen sort of news to come out. If you know the yen's weak and it hasn't got all the way down to here, or alternatively, if you know the Canadian dollar, if the oil's been selling off, you still don't want to be buying the Canadian dollar due to the fact that it might go one way and then the other reverse the other way. So you have to think about the straddle a bit more. You are going for a lot more pips, but you do have to think about it. You got to pair it right. You don't want to be trading, commodity currencies if the opposite way to what the commodity markets are doing. So if oil's bad, don't put a buy on the Canadian dollar because eventually it will go back the other way. I still don't use broker time. Let's say we're just going to buy the Canadian dollar on good news, and oil's been going well today, and the yen has some bad news coming out. So that's basically how I would set it up. So you need a 10 points away, you take profit of 100, stop loss of 30. You can leave your seconds at 5 or 6, it won't really matter. Your Swain needs to change to 3,600. You can have a break even in here of like 50 or something like that. And then, something like that. And that's really about it. So that's how I'll do a straddle. Gotta be careful with them. But yeah, good luck.